So we have two crucial things that are currently impacting the market. First of all, we have monetary policy. Will Jerome Powell cut rates? And second of all, we have the tariff war, in particular between the US and China. In today's quick update, we'll be discussing exactly that and trying to help you navigate the crypto market. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. First of all, let's talk about Bitcoin. We can see that not much has changed, and I know it's getting annoying, guys, but patience will pay off here. Now, we are currently at the point of control right around $84,300-ish. This is where we have the most volume after breaking out from this diagonal trend line, targeting hopefully what is to be $87,500. If we break below here and we can't hold this trend line as support, ultimately I do think that Bitcoin will be headed lower, but for now we are directly at this point of control. If you're looking to long this price action, I would personally wait until we come back and test this diagonal trend line before potentially moving higher. But honestly, based on my previous videos, I still think that it's looking more and more likely that Bitcoin rolls over, similar to how it did over here. I think that we're seeing a very similar phenomenon with Bitcoin at this current price action. And so if you want to trade this, whether you want to go long or short, you have the first link in my description down below, bringing you directly to Weeks. You get insane bonuses. All you need is an email and a password to sign up. Here's the 20% deposit bonus, which means that if you were to deposit, for example, $5,000 into your Weeks account, you get $1,000 back for free for trading. That's all it really takes. And based on your trading volume, you can earn up to $28,000. If you're already trading the crypto market, you might as well go ahead and join me on Weeks with the first link in my description down below. Looking at the stock market, we are closed today because it is Good Friday. As you can see here, confirmed on the New York Stock Exchange website, Friday, April 18th, the market is closed. And what I wanted to quickly go over here is once again the death cross and what typically happens after a death cross in the stock market. The death cross, if you didn't know, is when the 50-day moving average crosses the 200-day moving average. As we can see here, this green line on the chart represents the 50-day moving average and the red line represents the 200-day moving average. And we did indeed cross, which means it's a death cross. Now, obviously, we got some pretty horrible price action for stocks, seeing a massive correction from the 200-day moving average all the way down to about 16%. But if we take a look at it from the top here, we actually dropped for the S&P 500 around 21.4%, which is a pretty significant drop. Now, I warned you that when we were getting rejected over here at the 200-day moving average where my cursor is, that we would likely see a lot lower levels for stocks, and now these levels are here. So what happens next? Well, after this death cross, we did get a little bit of a relief rally, and it was the same thing with Bitcoin. I'm talking about stocks because naturally it affects Bitcoin, and if we zoom out here and look at the previous death cross, which we touched on about a week ago, what we can see here is that after getting that death cross, the S&P 500 actually went ahead and rallied on much higher above all of its current moving averages. But afterwards, from that top, we did continue to drop another 24, call it 25%. So this is something you do need to consider. While we did see a little bit of that short-term rally, it is entirely possible that we stay stuck below these moving averages because the death cross flashed. So if we go back to today's price action, we can see that we got this cross. So what this would potentially look like is that, yes, we dumped from the 200-day moving average, we got a little bit of a relief pump, and now from here, there's potential that we go ahead and move lower and put in a new low. And if this happens for stocks, I don't have to tell you that it would be pretty bad for Bitcoin. Bitcoin right now is trying to hold this point of control as we discussed, but I think that we will still likely resort lower. But there's one thing that you can bet on with 100% confidence, in my honest opinion, and that is Bitcoin dominance continuing to increase. With all of the market uncertainty, it only makes sense. Despite having millions of altcoins in the crypto market, Bitcoin dominance just continues to rise, and we are now inches away from filling that wick that we discussed in a previous video. Now, the next target is all the way up here to 66%, and if that target for Bitcoin dominance breaks and monetary policy doesn't improve, the tariff situation doesn't improve, it would be highly likely, in my opinion, that we can make it all the way above 70%. Keep in mind, this Bitcoin dominance rally is even more impressive because they are continuing to print more stablecoins. If we exclude stablecoins, Bitcoin dominance is already well above 70%. something that you do need to consider here. Now, let's take a look at what's happening with China and the US, and also discuss what's happening between the Fed, Jerome Powell, and Trump. So just a few hours ago, China halted all liquefied natural gas purchases from the United States as this trade war continues to escalate. This development was confirmed by shipping data and reported by multiple sources, and this stoppage has been in effect for now over 10 weeks, only getting reported right now, which is reflecting the escalating trade tensions between the two nations. This, of course, signals further complications in the US-China economic relations. Not a good look. Also, in the meantime, while all of this is happening, Trump has privately discussed trying to fire Fed Chair Jerome Powell. Now, we know that this isn't actually possible. The president is not actually allowed to fire Jerome Powell regardless of what he thinks. And the funny thing about this is that he actually elected Jerome Powell to be the Fed chair in the first place a few years ago. So we can see that this relationship is just getting worse and worse. But despite the fact that Trump knows he can't really do anything about Jerome Powell, he did come out and say that he'll be out of there real fast if he wants. Here's a video of exactly what Trump said.
Jerome Powell, you said that determination of Jerome Powell cannot come fast enough. He says he won't leave even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. But I don't think he's doing the job. He's too late, always too late. It was slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me.
So I'm not actually sure how likely this is, because Jerome Powell even came out at one of his speeches recently and said that they will not be influenced by any kind of politics. He's just trying to do his job as best as possible. Now, what I think Jerome Powell is mostly worried about, which is why he's not actually cutting rates, is indeed stagflation. Stagflation is an economic condition characterized by high inflation, stagnant economic growth, and high unemployment occurring all at the same time. It's a rare and challenging situation because the typical tools to fight inflation, like raising interest rates, for example, can worsen unemployment and slow growth further, while stimulating growth, like cutting rates, can actually fuel inflation. This is what he's worried about. Despite the fact that Trueflation says that inflation is actually much lower than what the Fed currently thinks, Jerome Powell is scared of this. Historically, stagflation was notable in the 1970s in the US and other economies, driven by oil price shocks and loose monetary policies. An example of loose monetary policy is when we had that huge COVID crash and they began a ton of money printing. This also coincided with when Ethereum started to outperform Bitcoin, as we can see a ton of capital added into the market, quantitative easing as they call it. Now, the reason why Ethereum and other altcoins are struggling to perform and Bitcoin dominance continues to increase is because we are now in restrictive monetary policy, quantitative tightening as they call it. And Jerome Powell doesn't want to pivot yet, despite the fact that Trump really wants him to. So we'll have to see how this continues to impact the market, but I don't think that things will change, at least for a little bit of time here. Now, back on the topic of China, President Trump actually came out and said that the US will be making a deal with China. But it doesn't seem like this is the case. Both leaders are really just butting heads, as Trump is also butting heads with Jerome Powell. In the meantime, though, China actually sold around 15,000 Bitcoins, opting to buy record amounts of gold. And we'll actually wrap up this video talking about what's been happening with gold. But it's clear, as we discussed in yesterday's video, that we are seeing record amounts of inflows in gold from risk assets. So over the last 20 years, gold is actually now outperforming the S&P 500. And if we zoom out even more and take, say, 25 years, obviously that would include the financial crisis, and so gold would also still be outperforming the S&P 500. So this is something extremely significant, and it shows that we are very much in a risk-off environment. Investors are scared of what's going on with the economy, and so they're transitioning out of stocks, out of crypto, as you can imagine, into safe havens like gold. So what does this mean for Bitcoin? Look, I still think that we will see further downside, especially if things don't get resolved. And right now, the market is likely to have a little bit less liquidity because it is Good Friday and the stock market is closed. Same with the spot ETFs. We could see some more price manipulation, so be careful if you're trading this market. The last thing I wanted to end this video with is the state Bitcoin reserve race. As we can see here, there is some solid progress across all US states, and we can see that Arizona is actually very close to enacting a Bitcoin strategic reserve. That would be epic. Now, a couple of them are falling behind, and if we scroll all the way down here, some of these have been rejected, but for the most part, we are still well on our way, and this is ultimately very positive for Bitcoin in the medium to long term. Don't stress out. In my opinion, it's still an excellent time to continue to dollar cost average into Bitcoin. And as I've been sharing on this channel, despite the fact that I'm trading the market, I also keep on buying Bitcoin the lower that we go, because I truly believe that it is the gold of the 21st century. At some point in our lifetime, I firmly believe that we will see Bitcoin at $1 million per Bitcoin. And that sums up today's video. The stock market is still below its 200-day moving average, and until we can confirm further upside, I still think that there can be potential downside in the stock market, and obviously this will be affecting crypto. In the meantime though, there is no trading for stocks until the start of the new week, and so you should be careful with Bitcoin because it's likely to be a little bit more illiquid, trapping traders. And in the meantime, there's a couple of tricky relationships that are battling it out: the US and China, and Trump and Jerome Powell. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.